you so much, Judy. You're exactly right. Sales tax is a burden for everyone. Nobody likes it. It's nobody's core competency. So certainly this is an area where people are really looking to do some automation. So we're glad to be here today. So thanks everybody for joining. I am Melissa Craig, and I am the manager of our strategic alliances team here at Avalara. And I'm based out of Atlanta, Georgia. So I know many of you are in the good Midwest in North Dakota and Minnesota. So don't envy me, but it's about 82 degrees here and a bright sunny day. So I'm hoping to bring some good positive weather vibes your way. So over the course of the next about 35 minutes, we're going to go over what are some of the sales tax challenges, why we're talking about this, and really what are some of the paths to compliance, because that's why we're here. We're identifying an issue. We're identifying that this is something that everyone has to deal with, but how do we actually get compliant? So that's what we're going to talk about today. All right. Well, we know that complexity is only growing. We have seen through the pandemic that our buying habits are changing. So not only are we going not regularly into brick and mortar stores, we're buying things online. We're seeing more websites pop up. We're seeing a lot of drop shipments, a lot of shipping. So how is all of that complexity changing in our world, especially for businesses that haven't had to deal with this previously? We're going to talk a lot about Nexus and what the definition of Nexus is and why some of the rules are changing. And this is a very costly endeavor that clients are going into. And it's not optional. States want their money, and the taxes associated with sales tax is only growing, and they really are in a budget deficit. 31 states right now are in budget deficits, especially during COVID, where so many resources have been strapped. People aren't going out and having those sales tax. So how are they getting that sales tax revenue? When you really look at a state's budget, about 47% of a state's budget comes from sales tax revenue. How are they capturing that revenue, especially since we're not going into stores, not going into restaurants, spending that money? Most of that money is being spent in e-commerce world. And so the rules really have changed to accommodate for this new world, really in e-commerce, marketplaces, things of that nature. So that's what we're going to be spending some time in. And let me go ahead and just briefly talk about the definition of Nexus. So the definition of Nexus is that, excuse me, the obligation to collect and remit sales tax based upon your business practices within a certain state. So that is what's triggering my business activities that trigger the motion to register and collect sales tax and remit that to the states. So we're going to talk a lot about economic nexus, some marketplace fairness laws that really drive nexus, and then also some use tax. But we're looking at, I want to spend just a little bit of time on these trigger events. We call these trigger events. This is where we're seeing a huge area of focus. So in your business, are you expanding into new geographies? Are you now selling into Canada via e-commerce? Are you doing cross-border sales? That brings a whole new avenue to complexity. Are you doing an implementation of a new ERP? We're seeing a huge shift from, of course, possible legacy GP, legacy NAV over into BC. So that's a huge area of focus in terms of implementation of new ERPs, new e-commerce. And then we're seeing, unfortunately, and fortunately, but a lot of mergers and acquisitions. So, you know, we're in a space where a lot of burdens are being kind of put upon us within the COVID world. And we are seeing a lot of mergers and acquisitions so that we can see these companies, have a fresh start. But this also means we're seeing a lot of influx of different capital. Private equity firms are doing a lot of capital investments. But one of the first things that these PE firms are saying, you need to get your house in order. You're getting sloppy. Your back end is sloppy in terms of your back office. What are you doing from a sales tax perspective? It's not quite cutting it with some of just the core ERP tax tables that you might have used in the past. So really this evolution and automation of sales tax is a way that PE firms are trying to get some handling on what their risk might be in getting funding to these companies. We're seeing a lot of new executives, and so we're seeing a lot of new initiatives with these new executives driving that sense of compliance. And then we are seeing some audits are happening, and we'll talk a little bit more about that later. And this is the time to do it, because we are seeing this get just more and more complex. So you see here, these are all kinds of Nexus creating activities. We're not going to dive into this a ton, but certainly how you do business within a state really affects this. We're going to talk about South Dakota versus Wayfair, and I swear you might have heard me say this before. You can't come to an Avalara presentation without us bringing up South Dakota versus Wayfair, but it's not too often that sales tax legislation just drops a complete bombshell on exactly how businesses are handling sales tax and some of the key drivers in this. So South Dakota versus Wayfair, just to give you an idea of what this is South Dakota, of course, went to Wayfair, the furniture online manufacturer, and said, Wayfair, you are selling too much into our constituents. You need to register and start collecting sales tax within the state. Wayfair said, South Dakota, no, we're not going to. We don't have inventory in your state. We don't have any people living in your state, because previously physical presence, that brick and mortar building, that person, that inventory was driving that nexus or that obligation to collect sales tax based upon your business practices. The world has now changed. Physical presence is an absolute nexus creating activity. But now South Dakota versus Wayfair went all the way to the Supreme Court, and the Supreme Court said that not only physical presence, but yes, just economic activity can drive the need to register and start collecting sales tax just by your economic activity alone. So this is a huge area of focus. So that's where this economic nexus comes in. Now you've got marketplace nexus. We're seeing so many different avenues that companies are going to market. So not only their own e-commerce sites, but now they're selling on Amazon, they're selling on Etsy. We've got parts on different marketplace sites. There are so many different marketplaces out there. What are some of the marketplace facilitator laws? Sometimes you kind of get off easy because the marketplace is going to collect and remit sales tax on your behalf. Affiliate nexus. Are you affiliated with any companies or any people within certain states? That can be a nexus trigger. And then also click-through nexus. Just to give you a little story, click-through nexus is actually what took down Amazon and when in New York City. So New York was really coming after Amazon, saying, Amazon, you need to collect and remit sales tax in the state of New York. Amazon was very strategic. This was like 10 years ago, was very strategic where they put their distribution centers and things of that nature. They put it outside of New York State. So they told New York, hey, we don't have a person, we don't have inventory in your state, so we're not going to collect sales tax. What New York did was actually put click-through nexus law on the books, and the Boy Scouts of America which is housed in New York State, had a banner ad on their website. As people went to the Boy Scouts of America, clicked on that banner ad, made sales through that banner, that just promoted click-through Nexus for the state of New York on Amazon. And after that, Amazon was like, oh, okay, now if I have to collect sales tax, they wanted everyone to collect sales tax. And that kind of really paved the way for the economic nexus that you see now. But I also wanted to just showcase, this is the complexity when it comes to states. So each of these have different states that have different economic nexus, marketplace facilitator nexus, affiliate, and click-through nexus. What South Dakota versus Wayfair also affirmed was that this is a states' rights issue. So each state can have different thresholds, different laws associated with their particular laws. So that just breeds that complexity that people just really, you can't keep track of it. Again, this is no one's core competency except for Avalara. So let us take care of it for you. So we're just going to dive in a little bit more on that economic nexus. So South Dakota versus Wayfair, that law actually said $100,000 or 200 transactions. They could be $1 widget, but if you sell 200 of them in the state of South Dakota, you just triggered economic nexus, and now you need to register and start collecting sales tax within the state. These are all of the states that you see here in blue that have economic nexus laws on the books currently. Florida just passed theirs. Missouri is looking to pass theirs. So really, you're going to see this expand into even more blue as people and as states adopt the economic nexus laws. Most of the time, you're going to see states adopt that economic nexus threshold of $100,000 and or 200 transactions. That's kind of the main rule of thumb that was adopted by the South Dakota versus Wayfair decision. Kansas, on the other hand, they kind of went rogue. Kansas went rogue and they said every single outside vendor needs to, if you're selling into the state of Kansas, you need to register and start collecting sales tax based in Kansas. And actually, this is kind of hot off the presses. We actually just had an Avalara blog that was March 31st. The Kansas Attorney General just said that they're taking that away because they do want to have a safe harbor law. And though these safe harbors are kind of those small businesses that don't do very much, so that under $100,000 of business, they really call that the safe harbor. When Kansas did not have any of that safe harbor, the Attorney General objected. And so now they are going to be adopting, based upon July 1st, the new threshold of $100,000 and 200 transactions. So I mean, this is really, the laws are changing as we speak. But one of the things that is really interesting is Kansas just came out and said, in the last year that we've had the law for economic nexus, they got $5 million worth of tax revenue based upon businesses that did 100,000 or below. So in that safe harbor law, kind of that small business, they collected $5 million just in the last year based upon their law. So it's gonna be interesting how they deal with that. That's for sure. But as you can see here, you're going to see all kinds of different requirements. One of the things I just want to also point out, California and Texas. You know, we always see California, you know, as such a huge area of economic activity. They are 500,000 in sales, but they also include exempt sales. So that's another thing to really say, okay, well, you know what? Most of my transactions are $0. I don't fit into this mold. but California, Texas, many other states count not only taxable, but exempt sales as well. And we're going to go into that a little bit more. We do have an entire place on our website where you can go, and we've got exactly what the requirements are state by state. If you have any questions of what your requirements are. North Dakota, I know you're right on the border with Minnesota, $100,000 in taxable sales. So they don't include their exempt transactions, but it all really just does depend. All right, so as we're talking about exempt sales, let's talk about this a little bit more. Again, we continually talk to clients, not only of e-commerce that have their end user B2C type activity, but we're seeing more and more B2B. And what that really says is this is such an emerging market in terms of now e-commerce and getting B2B sales and proving why you're not collecting tax. So if you've got most of your sales that are exempt, you really have to prove why you're not collecting sales tax. And that's through exemption certificates. And this is just, I'm going to go one more as we go through this, but exemption certificates come in many different flavors depending upon the state. So what form do we collect? When do they expire? Florida has expiration dates. If anything changes with your vendor, the signatory leaves, they have a change in address, they do an acquisition and something changes in the name. All of those are triggers to get new exemption certificates to make sure that you're having the proof of why you're not collecting sales tax. This is very, very difficult. We've got two examples here of a manufacturer in New York. They went from less than 75 to needing over 1,100 exemption certificates. Are they valid? When do they expire? This is a huge area that auditors look at because it's kind of easy to see your logs and say, oh, I have B2C transactions, I see a sales tax there, that all looks good, especially if you have an Avalara solution. But if you have those exempt sales that say zero tax, they're going to say, why didn't you collect tax on that transaction? And you need to justify why you're not collecting. This national wholesaler went from 500 to over 5,000. So Avalara does have a solution that can manage this process. And we're going to talk about that in just a little bit. But also, now you've actually collected this sales tax revenue. Now you actually have to remit it to the state. We actually spoke to a gentleman he said, Melissa, I'm collecting all of the sales tax. I said, okay, well, how are you actually remitting it back to the state? Well, it's sitting in my bank account right now. I'm like, whoa, we need to manage your filing to make sure that you're remitting the correct sales tax to all of these different states. Do you file on a monthly basis, quarterly, annual? What happens on an amended return? Things of that nature. Are you having multiple business systems that you're having to aggregate across? You've got an e-commerce system. You might be selling in a marketplace. You've got Dynamics GP, and you just did an acquisition where you might have a NetSuite system or a NAV system that you're now having to aggregate together. All of those are very much stressors when it comes to getting the correct information and remitting the information to the different states. How are you responding to your notices? And again, people are spending so much time doing this. And this is 100% non-revenue generating activity. So why are we spending so much time? It's also very prone to human error. This is not easy. And it is definitely a hard process where you really have to take a look at your processes. And this is one of the things that we're really seeing is that this is a repetitive process. It's highly volatile in terms of the differences, the sales tax changes, the laws that are changing. And this is also a very easy way to have information in the cloud. So utilizing that AI, utilizing that big data so that we can do this for you. This is one of the #1 cloud computing trend for 2020. And that is really because it is so difficult. And that it really has been automated to the point where it's now really a no-brainer. We always say it's not a matter of when you need Avalara, it's a matter of, or it's not a matter of if you need Avalara, it's a matter of when. So what trigger event has just happened in your world that is now making it justifiable to go to a solution, whether it be expanding economic nexus or such. So this is just the overall suite that that Avalara takes into effect. So we talked about the calculations. We have a cloud-based engine that is connected into all of your different systems, whether it be your e-commerce, your ERP, your order entry form, anywhere where there's a sales tax transaction happening, that's where Avalara would be connected into. Even if you've got a cloud solution, on-prem solution, a mixture of the two, we've got over 700 integrations. And of course, Microsoft is such a core fundamental area for us. GP was our very first connector back in 2004 when we started Avalara. So calculations is really at the heart of everything. Having those returns, getting that treasury piece, getting those returns out in time and correct. The document management, that exemption certificate management, we've got an entire team that can do those exemption certificate management and make sure that it's right and that you're justified in not collecting sales tax. We can also do your registrations. So if you see that you're getting close to hitting an economic nexus threshold, or you've got 5 states that you're now needing to expand into, we can do those business license registrations for you so that you have exactly what you need. And then of course the treasury piece. If you have Nexus in 10 states and you've got returns going out to 10 states, we can do that for you with one EFT transfer, and we can do the treasury piece on your behalf. And then the big thing is around insights. So with Avalara, we actually give you a dashboard where you can see every transaction that's happening within your Avalara ecosystem, and whether e-commerce, ERP, and you can see where you might be getting close to some of these economic nexus triggers. So are you getting close to that $100,000 in many states? We show you so that you can actually have those insights and make those business decisions based upon the best information and the most up-to-date information possible. All right, let's chat a little bit about Streamlined Sales Tax. So this is an amazing program, but what is SST? So you can see the states in white. They're the ones in the program. It's 24 states, and they got together to simplify or streamline the sales tax registration, collection, remittance within all of the states. So Avalara is a certified service provider. We're only one of 3 that have partnered with the SST program for over 10 years. So this program allows you to get registered in these states at no cost, file returns in these states at no cost, and Avalara does not charge you for the transactions within these states if you are a volunteer seller. So in order to take advantage of this program and be qualified as a volunteer, you see here, you must not have no more than 50K of property or inventory, and you don't have a place of business and less than 25% of your total property or payroll is in the state. So 24 of the 46 states are members of the program. So a good example, I'm here in Georgia. So let's say Georgia, North Carolina, Tennessee, you need to possibly get registered, or you're hitting some economic nexus thresholds, but you're only hitting those thresholds based upon your economic activity. So Avalara will register you at no cost, will file these returns on your behalf at no cost, and we won't charge you for the transaction in this state if you qualify as a volunteer seller. So does it make sense to join the program if you're just hitting a threshold in just one state? Probably not, but if you're hitting in really a handful of states, this program can be of amazing benefit. So it would save you the $349 to get registered in those states and about $50 to file returns in those states. And then of course the transactions. So the program takes about 45 to 60 days to get up and running, but it really is an amazing program that we would love to see if you qualify for this program. A lot of our clients take advantage of this program. All right, so that's actually getting us a little bit, we're almost to the end. So if you have questions, put them in the chat. But we do have a resource hub in terms of COVID that shows the latest news. The sales tax laws, this is going to take you to that location that I spoke about a little bit earlier. Really talk about some insights, sales tax automation. And I love reading the Avalara blog. It's actually, obviously sales tax is much of my life, but it's really fascinating, some of the laws. We actually have Wacky Tax Wednesday, which some of the things that are happening in some of the states, I don't know if anybody's from Florida, but it's a little bit crazy down there. There's a lot of good wacky tax information to keep you informed on. So with that, I'll go ahead and open it up for questions.
Okay, awesome. Thanks, Melissa. We do have a couple questions here. Okay, so question about Wayfair. Does physical presence, is it still a factor in post Wayfair?
Yeah, great question. A lot of people just now think economic nexus or the economic activity, but physical presence is still a indicator to get nexus. So whether you have people, whether you have inventory, or of course those brick and mortar building, and especially if people are doing fulfillment by Amazon, Amazon might have your inventory in multiple distribution centers. So you might have inventory and have triggered Nexus, possibly without even knowing it. So FBA actually has a site where you can see and manage where you actually have your inventory, because that can absolutely trigger Nexus, that physical Nexus presence. We're seeing a lot more also people. So, you're right there on the border of North Dakota versus Minnesota. You might be going into the office, or you might not be going into the office. Let's say, your offices are in Minnesota and you live in North Dakota. If you now are permanently in North Dakota, that will trigger Nexus if you've never had people in North Dakota before. So all of these different things can really affect the Nexus profile, but physical presence is absolutely an area of concern.
Wow, that's great information, and that does affect our company as well. So, okay, here's one. There was a lot of states with that SST eligibility. How do you know? How's that determined? Where?
Yeah. Well, I tell you, this is the best way. So we went over this a little bit, but that no fixed place of business for more than 30 days, less than 50,000 of property and payroll. So again, if you've got people that are in different states where you might not have had them before, maybe pre-COVID, now you've got remote employees post-COVID, that might be a big trigger where you might not be a volunteer in a certain state. But we can work through all of this with you. We have these discussions on a regular basis with our sales teams and our sales executives. So that's certainly something that we can talk about. And then of course, just the less than 25% of the total property. So all of those, you would need not to have to qualify as a volunteer. But it's always a little complicated. That's why we always encourage a good discussion with an Avalara rep.
Okay. This is so fascinating, all these different states and what applies to which one. So are there some states that are more aggressive on going after business and being audited, or checking out what the fines are?
Yeah, we are seeing, especially the states that are in these high budget deficits, which we've got 31 states in budget deficits. They're out there looking at how to make how to audit and look to make up that gap. So we are seeing quite a few. We're expecting more. The decision with South Dakota versus Wayfair happened in 2018. Typically, states have a 3 to 5 year look back period for the majority of states. So this is the time that it's now 3 years out. June is going to be 3 years since the Wayfair decision. So we are expecting an uptick in audits, especially around sales and use tax. I always like to use this example. So California, we always see a huge area of audits. So one story, and it actually kind of brings it together because it's an easy story that everyone can relate to. So an auditor went golfing in California. So one of the California auditors was golfing. They had a huge shipment of golf balls come in to the pro house. They took half of the golf balls and put them in the driving range so that they were just using those for their driving ranges and for the so they were going to use them in-house. The other half they put out for retail purchase. Well, the ones that they're utilizing for the driving ranges, those are subject to use tax. And so the auditor looked at that and they said, ooh, I bet they're not paying use tax on those. And they went and they audited every golf course in California based upon that particular principle, and they made a killing. And in terms of use tax, so it's unbelievable some of the situations that you're going to see, but you will see, if you have a highly auditable industry, auditors do talk and around use tax and exemption certificates, especially where they have those, why didn't you collect sales tax? We're seeing a lot of those. Those are the red flags for auditors, but you will see more. Idaho just hired 40 new. Idaho, really? So Idaho just hired 40 new auditors. So these are the types of things that we absolutely are seeing more of.
Wow, Melissa, that's so fascinating. Thank you so much. Very, very informative. And I'm very thankful and grateful that there's a company like yours out there that's keeping track of this, so we don't have to have sticky notes all over everyone's company trying to figure these out in the research that has to go into this. So thank you again so much. I appreciate all you're doing. And if anyone has any questions and follow up, you can feel free to email me, judy@iscorp.biz, or email melissa.craig@avalara.com. Thank you again so much. And
you got it. Thank you so much, Judy.
you bet.